Hello and welcome to another episode of the Investor Financing Podcast. I'm your host, Beau, and on today's show, we have the founder of Think Multifamily, Mark Kenny, is in the house, and thank you for joining us today. Mark, you and your wife have invested in over 10,000 units. You teach multifamily investing, you have conferences, you have mentoring programs. So you're a perfect person to interview on the multifamily business. You like to buy in cash flowing markets. So love to discuss where most of your acquisitions are, where you are looking today. It's a more competitive market right now. Your thought process on the market with interest rates moving up, but yet a shortage of housing. We've got a war going on. We're just coming out of COVID. We still have COVID. A lot of things have been happening. There's nobody's got a crystal ball right now. But it seems to be that most experts say in an inflationary market that real estate's still probably one of the best assets to buy. So welcome to the show.
Thanks, Beau. Thanks for having me. I appreciate it.
Yeah. So let's kind of unpack, you've been in real estate for over 25 years now. Did you start directly in multifamily, or was it kind of the progression of single family duplexes? And then you said, wait, there's a better way.
We were buying small, 2 to 4 units. So the largest I started in college. So I was a senior in college. My twin brother and I, we went for accounting, and we ended up getting corporate jobs too. But we're like, hey, I think there's probably better stuff to do. We didn't have anybody, unfortunately, in our family buying real estate or anything. So we just said, we're gonna go buy, some multifamily properties. And we did at 22 and started buying small, 2 to 4 units. So just on our own, bank loans, no syndications or anything like that. And then 2013, started looking at doing syndications, and we've done over 90 deals since then, over 14,000 units total purchased so far. We currently have a little over 10,000 under management. And, but it was, we did realize pretty early on, my wife and I got married young. Unlike you, I know, but we got married young. And it was one of those things where we were so involved in the small multifamily, and I was working, I know you did business manager consulting and things like that you do. I was working, minimum 85 hours a week, every week, and trying to come home and shovel snow in Michigan where we lived at the time and evict people. And it was kind of a bad experience. So we were very happy to find that we could actually participate and buy larger multifamily, and that's kind of what we started doing back in 2013.
That's awesome. That's amazing how fast, once you get your business model down, that you can grow your business to where you're at today. I mean, you must kind of kick yourself sometimes when you look back and go, wow, we own a lot of assets now, and we've grown into a pretty large company. I mean, I think most people looking from the outside in are like, wow, that's impressive. It's almost like unthinkable that you can actually grow a business to that 10,000, 14,000 unit mark. And I think it sounds like once you found syndication, you realize that you can leverage a team, and that really what makes sense, because a lot of investors get stuck in the me, where multifamily investing is more of a team sport. So how did you guys come up with I love the name Think Multifamily. Was that just kind of you're thinking, well, what should we call our company?
I would have to go back and remember. I'm confident my wife came up with it, not me. So she's more the creative person. I'm more on the analytical side, CPA background and IT. But it was also, we were really interested in creating something that had a family vibe to it. So we, a lot of people in our group, families are involved, and we hang out together. We go on vacation together. So in July, we're going to Florida with a bunch of people from the group. But we saw a lot of other companies out there, and not that it's bad or good, but they were all business minded, and people didn't necessarily, in our opinion, have kind of that family environment. They were very competitive. They didn't seem to try to help each other as much from what we experienced. So we said, why not, create a group that, one, has, in our opinion, more extensive education, but also where people can come together. And let's say you're really good at analyzing deals. And I'm like, I don't like analyzing deals, but I can raise capital. So we kind of come together, and each of us will provide some sort of value. And with that together, you could get involved in a lot more deals that way. And I can get involved in a lot more deals that way, and work on things really that I like and I'm good at, and not really work on the things I'm not good at or don't like.
That makes complete sense, because I don't want to underwrite deals. I'd rather I get real estate. I understand I've bought and sold a lot of properties, but it's just like the thought of buying bigger multifamily properties. And I know I don't speak alone. It's like we're kind of trapped on like this whole like spreadsheet thing. And it's like, if you're not a CPA or engineer, you probably don't like spending time in the weeds in Excel and in these spreadsheets. And now what I'm learning through interviewing so many people, it's really like what I have to get my mind around. And I think you just really explained it. It's really like a team sport, and that you do what you are good at doing and then find team members that can fill in the holes. Like I could really, what I should do is, I think I'm pretty good at business development and capital raising. So what I should be positioning myself for is, okay, find a good partner that's really good at underwriting deals, that's going to like double check everything a million times, and like, okay, here's our projections. If we bump rents up by this, and we turn over a unit a month, this is what our projection is going to be. Then it gives me the confidence, like, hey, I know I got one of the best underwriting teams here. Then I could go out and raise capital for the deal, because whenever you raise capital, right, the most important thing is protect the investor's capital, and that's number one. So like, you got to have that team that you feel comfortable with. First, you got to find the opportunities. So you really need so if you were to like give me some framework of how to build a team, what would that be like today? And I could say today, I would say my strengths would be the business development, the capital raising portion of it. Where would I start, building a team? I mean, obviously it sounds like a lot of people like in your group, they meet each other in your group and they figure out, hey, we're a good fit together. And then they start building off their businesses. Is that kind of how it works in your platform?
It does. And whether it's in our group or a meetup or in an event you attend, there are, like you just explained it, perfectly, where you like doing maybe the capital side and maybe not spreadsheets all day long, and you meet somebody and, hey, what do you do for work or whatever? I'm an engineer or I'm an IT guy. You're probably like, bingo. Most likely, they're probably going to like spreadsheets more than you do. I think the aspects of building a team is kind of like, hey, your team as far as underwriting and asset management and capital, and maybe somebody signing the loan and things like that. But then you have the extended team too, which can take a little more time to kind of figure out, like, hey, who should my attorney be, or my CPA, or insurance broker, or who are the brokers selling deals, and all those different aspects of it, property management companies. So ideally, you team up with somebody that's already done, some deals already. One, you kind of learn hopefully from maybe mistakes they've made, but they also have some experiences dealing with third party, whether it's attorneys or brokers and things like that in the industry. And they're going to save you, tons of time by doing that. But it's typically, you could be on, some sort of forum doing it. Most people that we find, they team up, and it's usually either they have some sort of connection together, maybe they have similar interests, or maybe it's their kids have interests that are similar, and they have some sort of skill set. If all of us do is, all want to underwrite deals, we're missing a big component of it. But it's typically, like you mentioned, face-to-face interaction is the best if you can get it. If not, doing a Zoom call, and people in our group kind of fill out a little questionnaire as far as their skill set, what they like, what they don't like, and then other people in our group have access to that to figure out, hey, I need someone that can sign on $20 million loan, who can do that. So that's kind of the way it's structured.
Yeah, that makes a lot of sense. So can you tell me a little bit about kind of your mentoring philosophy as far as, markets? Do you follow like the emerging markets? Or are you more like the kind of cash flow market buyer, where you like certain markets just because they're solid, they're not really the kind of emerging markets, just like kind of the bread and butter Midwest type of market?
Yeah, once you start doing a number of deals, it's a mixture for me right now. So there are some markets that we live in Dallas area, and Dallas is pretty pricey right now. But I personally, if I'm buying a deal just for myself, I'd be like, I'm okay with a little bit lower return, because I have a lot of other deals that maybe are more of the emerging markets. When you're trying to syndicate, it is difficult to buy in some of these markets, because the returns, on paper, based on the facts you have today, they're lower. So investors are probably going to have to revise their expectations a little bit. You mentioned at the start of the podcast with interest rates and things like that, which could have an impact. So people might have to revise what they expect for returns. But we still buy in Texas. and we buy in the Southeast. So we're in 12 states. And what we saw, you mentioned COVID as well. We saw during COVID when people would say, hey, this state is landlord friendly. That's a pretty broad statement, and in most cases, an incorrect statement. Nobody knew who was landlord friendly until COVID hit. We weren't tested before. I can tell you Dallas was not landlord friendly at all. So it's more county and judge dependent on that. Arkansas, in some cases, the judge is like, during COVID, you're not paying your rent, get out. Much different atmosphere. So we've been able to go into a number of markets that were probably early stages, like we got in Atlanta 7 years ago, and Memphis, and in those areas. And people now, we're buying stuff at $35,000 a unit or so in 2015 in Georgia that's now going for 120,000. A unit. So much different environment. Arkansas, we bought about, that would be about 10 deals in about 18 months there. So I do like some of those cash flowing markets for sure. And ultimately it comes down to your investors and what they're looking for. I think that if you're buying strictly for appreciation, I think you have a higher risk of getting caught. Because you still need cash flow in my mind to kind of make up for that. So people can buy in California. Why would anybody buy in California? Two big whammies, right? One, I know you're from there, but you can't evict very easily. That's a bad thing. But the other one is that, the cap rate compression where people are buying, well, I think it's going to go up. And we're seeing more markets like that are, whether it's Phoenix or Dallas or Miami, that 5 years ago, they weren't like that. And now people are buying in those markets saying, I'm okay buying strictly because I think the market is so solid that the pricing is going to go up and the cash flow could still be low. But I do like cash flow for sure, at least a component of it. And you have to be careful as an investor. If your cash flow, like I want to do cash flow, and we buy some properties that were majorly distressed, 0% occupied, 28%, really low occupancy, you're not going to get cash flow probably for 2 years on those. So don't be looking at those deals as an investor if you're looking for cash flow. So it's a mixture, but I do think no matter what, the deal has to have a cash flow component to it.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau Eckstein here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. And so at this part of in the market cycle, how many of you still have like 10,000 plus units. Like I would be thinking that it would be are you looking at some of your assets to sell because it's such a good time to sell right now? Or are you just, the cash flow is so good, you're not really trying to take them full cycle at the moment? I'm just kind of curious, kind of with a little bit of market uncertainty, does it make sense to be selling right now? Although what else are you going to put your money into, I guess?
Right. So I don't know if it's fortunately or unfortunately, we're selling more than I anticipated. So we also have 16 deals either under contract or accepted LOI already this year. So we have a number of, new acquisitions, but we'll be selling about 12 deals or so or a little more than that, probably in 12 months from starting last year. So we still have another 6 deals or so we're selling this year. And frankly, some of these guys are coming in, they're not listed properties, and they're like, hey, we have a deal we bought 15 months ago, $75,000 a unit, offer, at 12 months of ownership, $134,000 a unit. So it's from 75 to 134. That's past our 6-year projection. So it's kind of hard to argue not to sell those type of deals. And fortunately, they're on bridge debt, so we don't have the huge prepayment penalties that you have typically with a Fannie or Freddie loan. So yes, we're selling a lot more than I probably would anticipated this much, but it's kind of hard to argue if you can meet your 5-6 year projection in 1 or 2 years. You probably have a good, you could do a refi as well. And in some cases, refis aren't as strong right now as they were even a couple of years ago. So we're selling a lot, but we're also buying a lot.
Yeah, that's good though. It's pretty amazing in a year's time that you already hit your pro forma goals.
Yeah, I mean, I would say they're all out that way. We've had
Yeah.
probably more, higher returns definitely than we would expected, but that's definitely going on in the market right now.
Right. I mean, at the end of the day, real estate still has problems. It's not like everybody's making
Right, for
money
sure.
hand over fist. It's like, hey, listen, there's a lot of things we have to go through, evictions and turnover and contractors that aren't getting the job done like they're
For
supposed
sure.
to, and the cost of materials going up by 40-50% and labor shortages. So it's not an
Right.
easy, it's never an easy business. I think people in the media, like we see all these people kind of like flashing like how successful they are in multifamily. I mean, you got like the Grant Cardones of the world, which he's extremely successful but he's very flamboyant but at the end of the day, it's a very difficult business, and it's not like you can just wake up and just start syndicating. You have to learn the business. I mean, it is amazing though how I've seen a lot of people scale quickly through the power of syndication. What is your conferences and your coaching programs? What does that look like? If somebody wants to get their feet wet, do you have the kind of like get your feet wet programs and then full immersions type of programs?
The conferences which we do are that are open to the public, and then we have closed kind of events just for people that are in our one-on-one coaching. But the conferences we do just 2 a year. One coming up, it's a deal analysis workshop. So you bring your computer. You probably would not enjoy it, but you bring your computer and work through deals for 2.5 days.
Yeah.
So it's one topic. That's it. Deal
Yeah,
analysis.
but that would actually probably be pretty good for me to do, to like work through it, just like and learn like,
Right.
okay, you can do it. It's really not that difficult.
And what to look for. So you mentioned if you had someone underwriting deals for you, you would learn enough to be like, okay, here are the things I should look for. I don't want to be in Excel, but I can look at it and see. The other one we do is called the FIRE event, and that's all steps. So there are 14 steps. We obviously didn't invent multifamily investing, but we have 14 steps that we go through. And that's a combination of education. And then we have a number of guest speakers there too. So maybe it's financing, financing for multifamily 5 units and above is 100% different than, single family and things like that. So, or taxes and, SEC rules around syndicating, all those topics are discussed there from kind of front to back. And then the one-on-one coaching, which is something we didn't plan on doing, frankly. When we started, it was one of those things kind of through some circumstances, we started doing a little bit of education, the more and more, but we wanted to create an environment. I mentioned kind of family vibe, family environment. And I do all the one-on-one coaching. So people have direct access to me. We don't do the sub coach model that everyone else in the industry does. A couple reasons. One, I like doing it. And two, I want to be relevant. I want to do deals. I want to be involved in deals. I don't want to have just an educational group, because at the end of the day, the whole idea of education group is to do deals with people, right? And have people do deals and hopefully leave their job if they want to, wherever it might be. But it's really structured around, you come into the group, we give you a plan to follow. You have direct access to me. It's really unlimited one-on-one. You get access to brokers that we have in the industry. There are no contacts that we say, oh, this is a special broker, so we're not going to tell people about them. We don't do that. We get broker contacts. You get a list of everybody in the group to kind of reach out to. We have calls as a group in addition to one-on-one. We have the closed events. And the whole idea is to try to get someone to come in, like you mentioned, you have a certain skill set that you like and you're good at. You come in, focus on that, and meet other people in the group that need that skill set. And then you need a skill set from somebody most likely too, because very rarely is somebody doing all aspects of it. But the whole idea is come in, get into a deal is, kind of as fast as possible. We had 74% of the people in the group get into a general partnership spot in 6 months or less, which I can tell you from an industry standard standpoint, that's super fast. We have people that, in a matter of a little over a year doing, 6-7 deals. That's a lot. Probably wouldn't even recommend it for the average person, but it's reality. People selling deals after, 12 to 18 months and making more than they would make in, 5 to 7 years in their W-2 jobs. So there are a lot of things like that, but we'll do a lot. I like underwriting, by the way, just from background wise. So I spent a lot of time there trying to help people. And you could do everything you mentioned, or do everything almost, if you want to say on paper, correct, and engage all the people, and you're still going to have some issues during a project. You just are. And, we've made mistakes before, and we've done a lot of different transactions, seen a lot of things. So very few things we haven't seen before. And that's kind of what we're trying to provide for people is, hey, hopefully you don't have to go through the same hassles we went through or mistakes we made, or try to do it on your own like we did, and you just run out of capital doing that. So that's kind of the goal: get people into deals quickly, and then hopefully have some personal relationships you develop in the group as well.
I love it. And talk to me a little bit about your wife. And it sounds like you guys have completely different skill sets. And was she interested in real estate back in college too? And like, how did this transpire? Was she the one that kind of motivated you, or were you kind of like all in and then she got into it once she's like, wow, we can make a living doing this?
No, for sure. Yeah, she's amazing. So we got married young. And I bought one deal before we got married when I was in college, and I got married when I was 23 and she was 20. So pretty young. And we started buying small multifamily together. She liked it. I liked it. I don't know. Sometimes you wonder, is it something that God just made you that way to give you these certain interests? Is it nature versus nurture? I don't know, but we both like real estate. And then I was a CPA for a while, did IT consulting, had an IT business. And I mean, my IT business was at least 90 hours a week, and I would sleep 3 hours a night. And people traveling, people all over the world, my phone was going off 24 hours a day. It caused a lot of issues because I took time away from my wife. Like pretty much all my time was for work. So we started getting involved in syndication passively first, just with some retirement funds. And then she was, my wife Tamia was like, to the point where you need to do something different. Like, this is not working when you're like, never available, right? Which was true. And so we were like, well, we like real estate. We were continuing to buy real estate, smaller properties. And we said, why don't we look at a friend of ours syndicated? I invested in that. I said it made a lot of sense. So we started looking at doing syndication. So she was very supportive, pushed me like crazy as well, but very involved in things. And she does have a completely opposite skill set, fortunately, than me. So she's very much on the branding and marketing and those type of things, and event planning, all the things I'm horrible at and don't like to do. But reality is, people say, oh, I couldn't do it without my spouse, and, pat on the back or whatever, things like that, which I get, having a supportive spouse. But reality is our company wouldn't be anywhere near what it is today if it wasn't for Tamil. And the biggest aspect of it, which has changed my life, forget the financial aspect of it, but from a personal standpoint, I did IT, all I did is work, didn't do anything, didn't really go places, just worked. Well, my wife, Tamil, when we started coaching, she said, I want to do it where it's family environment. We go on vacation together. I'm like, why would anybody want to do that? I don't even want to do that, And well, lo and behold, every year since we started, we've gone on vacation together, cruises. Last year went to Florida. This year we're going to Florida. And we have people like this past weekend, we had like 5 other couples, like from our group, and service providers at our house just hanging out, which happens on a regular basis, and things like that. So she pushed the family environment, and she did push as far as getting the deals, very supportive. And I said, hey, if I'm working like this, you're going to have to help, which she did. And that's kind of the way we were able to build the business.
Wow, that's an awesome story. I love it. And it's just, just to think about, like, it sounded like you've been successful even in your past career, you're doing very well, but you just had no life because all you could do is work. And now at this point in your career, you could probably sit back and slow down if you wanted to, but you're very passionate and you love training and teaching people this. And it sounds like, what are your goals kind of, in the next 10 years or so? What's that going to look like for you?
Yeah. So fortunately we're in a position we don't really have to do anything at all. But I mean, when I was younger, I'm older than you, but when I was younger, I'm like, when I'm 40, I'm gonna like go sit on the beach and like not do anything, right? And I'm like, okay. Then I turned 40, right? And then I turned 50 last year. I'm like, yeah, that doesn't sound appealing. It might sound appealing for like a few days, right? But reality is, both my wife and I really do like it. People have asked us, like, what are your goals for number of units to buy and things like that? And I'm not saying that's not an important goal. We've done that, years before. But reality is that we're so active. We have a really good reputation. We've never not closed a deal that we've gone under contract with and things like that. So I'm like, we're gonna do what makes the most sense, and we're gonna buy as many deals that we can possibly buy. We did 24 deals last year, and we're like, how did we do that many deals last year? We're like, we can't top that, and we may or may not top it. We have 16 deals already the first quarter. But reality is that I am more interested for sure, not just doing deals, but also when I hear people that are literally they quit their job, a spouse quit their job, or these people are making, like no joke, like 18 months or less having a project, and they're young. Some of the guys are in their 20s making 800-900 grand on a sale of their own money. That for a lot of people is life-changing money. That's now people like, is that typical? Probably a little more typical now than it should be or will be. I don't know. My point really being is that I'm much more interested in trying to get people that want to change their life, whatever that looks like to them, become financially free. A lot of other things going on in the world. And if you're financially free, you can kind of say, I don't really care about your mandates or whatever it might be. You're not going to force me to do things. If you choose to do it, fine, but I don't want to be forced to do something. And reality is, people I know personally were forced to make certain decisions strictly for financial reasons, which they would not have to do if they're financially free. So my goal is more to, retire more people, and retire is relative. They're not sitting on the beach typically. They're still doing real estate, but leave their job, or the spouse leaves their job, not have to go to an office and spend more time with their family. That's really my goal. I get way more satisfaction. We close deals. People are like, did you celebrate? I'm like, no. We don't, and we probably should more. I think that's probably important to do. We don't do it. But I can tell you when someone does their first deal, or someone's like, hey, I'm able to retire, or my wife or husband able to quit their job. We get a lot of stories like that. That's what really drives us to do it, because we don't have to do it. We don't need the money to do it. We don't. We can make, a lot of money just doing deals. You don't have to coach to that, but we want to do it.
Yeah, no, that's awesome. That's such a good story, because, I work on the finance side, so I'm always listening to people, and a lot of times they're investing in different assets, and some of them buying businesses. And it's like everybody generally has the same goal. It's financial independence, because that's the really end all be all, where what you're doing, like you probably go to work now, you don't necessarily need to get up early anymore. You don't need to, but you're probably driven now because it's like fun for you to like see, oh, my student just closed on this 200 unit building, and that deal alone, they'll be able to live off the cash flow, and they can quit their W-2 job. I mean, that's exciting. And I don't know. Not everyone in the world, there's some people that are always going to be a W-2 employee. Let's face it.
It's okay.
There has to be. The world has to be balanced. But the people that are seeking that, there's great opportunities. And it sounds like your network is extremely amazing for that. It's like, hey, go get trained, get around like-minded people. And if you truly want to be financially independent, because it's a choice we make, right? We have to make it here. Like, okay, I'm going to be financially independent, get away from, although I love doing loans, in the back of my mind, I keep on saying, Beau, you have to become fully financial. I own some rental properties, not enough to, but it's like, now it's like 44 years old. I woke up one day and I said, oh, wait a second, I'm a middle-aged man. Like I was telling you, I got married later in life, so I didn't realize it. I still thought I was in my 20s, but no, I'm a middle-aged man. So what is it? I got 6 years or 5.5 years till I turn 50, right? Like, that's kind of scary. Then it's like, okay, by 50, what do you want your life to look like? Okay, so what would 1 or 2 apartment buildings do for me, right? That's where it is, versus me going out and buying a 4-plex and a duplex. And you got to do too many of those deals. The time you get the CapEx each year, you're really not cash flowing. So you have to buy larger properties and do it as a team. You diversify the risk and the duties that are needed to be fulfilled. And then you get a smaller portion of the profits and the equities, but it works out because you can do larger projects.
It does. And then you can do things, maybe that you like, right? Like, hey, I want to buy this, or there's only certain things I like. And I'm not like one of those guys that buys everything. I do like cars for whatever reason, but you can say, I'm going to buy that. Is it a financial investment? The ones I buy are, because they're older, but generally speaking, not everything has to be financial investment. People are like, oh, you're silly to buy this or that. Not for me, but I'm like, okay, go look at some of the people that you mentioned that are like gurus in the market. It's like, how much they spend on a dinner? I could say that's silly. How much you spend on wine? Well, that's silly. So it's okay once in a while if you have the money to buy something. And, I was 48 when I bought a car that I wanted. Okay, I waited 48 years to do it. it's just one of those things. And maybe people are like, well, cars are stupid. Well, okay, fine. The ones I buy usually appreciate, so it's okay. They're like that. Or you can say, now I'm in a position when you're early on, 20s, maybe you're given hundreds of dollars here and there for charities. There's certain charities and organizations that we support and have for a long time, but our ability to give, substantially more, like potentially life-changing money to these people, like, hey, you know what, we have a plot of land next to us for X number of dollars and we want to buy it. Okay. Or my nephew who Guatemala, he's a missionary, just started about a year ago. I asked him, do you have needs? And he said, well, we have good money for the year, but we need a truck. And I'm like, well, how much is a truck? And he told me, I'm like, okay, then I'll send you money for a truck. Because my point really being is that people think, oh, money's not important. The people that say that never were without money. That's just reality. And if you can help people, if you're going to be stingy and do everything for yourself, keep all the money for yourself, that's your choice. No one should be able to force you to do something else. But hopefully, as you get more money, you become more generous and you're able to give more money to people that can really change lives. That's the goal. And that, again, was really an influence on my wife, because early on, I was like, I didn't make much money. And she's like, oh, let's give money here or there. I'm like, no, I don't want to. And I did kind of probably a little more begrudging, didn't really want to, but I did anyways. But now it's kind of like, I like to be able to go to a charity event and be able to, donate a pretty big amount, and it's cool because I know a lot of places we go, we know who the people that run those organizations, and we trust the money is getting used for good. So that's a cool aspect. I think just find something that you're interested in. Doesn't have to be the same organizations other people are. And hopefully, like I said, you don't become more stingy, because a lot of people become more stingy the more money they get.
Yeah, that doesn't make sense to me. I mean, like, once you have enough money coming in the door and you really don't have worries anymore, it's like, what's the point? It's just gonna, you're gonna die.
Yeah, exactly,
and
right.
Yeah, and it's like, you can do good in this world, and like, why wouldn't you want to do good in this world? And I think we need more people. We need more people that do good in the world. I'm on Facebook and I follow like these animal things, and like, this is one guy and he's all he must have been in prison. He has tattoos all over his face, but he's building this foundation for animals, like, because they get abused. And I'm like, God, this is something I would donate to this guy. Like, I would pick, like, and it would be cool to, like, he's trying to build his first, shelter for these dogs. It'd be cool to just be able to, stroke a check for $500,000. And that doesn't mean, it's a lot of money, but it's not a lot of money because you're successful.
No, that's right. That's right.
And that's
cool.
That's beautiful. I'm glad you're like that, because there's a lot of people that aren't. And I hope anybody that's listening, gets on it. And even if you don't have a lot of money, I always like, do some good during the day. Like, somebody calls me. I get a lot of people that call me for financing, and sometimes it's like they're never going to get the loan, but I'll spend 30 or 40 minutes with them just saying, okay, here's what you need to do to be able to get by this building or to get this SBA financing. And I could be short and abrupt, but I think, for the betterment of society, we need to be doing this and it's great that you're now 50 years old and you're able to do that and help people. And I agree. It sounds like you're not a big spender, but if you want to buy a nice car and that's a passion of yours, you should buy a nice car. And it sounds like you're buying like classic kind of Chevelles and things like that. I don't know, what kind of cars are they?
Yeah. So now I'm buying. I bought into fortunately had some capital, and I bought into like a resto mod shop. Basically, people don't know it's making old cars new and new frames and motors and everything, right? Brand new. But yeah, so I'm buying mostly older Corvettes, 60s Vets and Camaros, and partner just bought a Charger, 68 Charger. So all the cars like that. And he's been doing it 34 years. So I bought into that. I paid money to buy into his business, and we're doing it together. And there won't be any money for a year because, it took us 4 months to order parts, for motors and chassis and everything like that. But I love doing it. And in all seriousness, if it was almost like, hey, I break even with that, which I should make some pretty good money with it. But if I broke even with it, I'm like, that's okay with me, because I love doing it. It's a passion. I don't know why it is, but it is. And but yeah, I'm trying to buy more of the classics.
That's awesome. I love it. And I really appreciate your time. I think this was a very awesome conversation. I always get inspired, and that's kind of why for a selfish reason, I love interviewing people that are successful, because you get a lot out of it. And there's a lot of, you're willing to share everything. You're an open book. And I think that's pretty cool that you spend your time and willing to share information. Is the best place for people to go to thinkmultifamily.com to find out
Yes.
more about you? All
Yes,
right.
that's perfect.
Well, Mark, really appreciate the conversation and look forward to taking your underwriting class here in the future.
Sounds good. Thanks, Beau. Take care.
All right. Thanks a lot.
Bye.